By Carrie Chris is 6 p.m. Time for CBX Business News. The Business News headlines is brought to you by CBX Wealth Management, making more possible.
A JPS loan debate, geothermal backing, and European gains. Good evening and welcome to CBX Business News for Wednesday, November 26, 2025. I'm Rochelle Moncrief. Thanks for joining us. Coming up in the newscast, locally, Jamaican government defends decision to loan JPS US $150 million to accelerate Melissa restoration. On the regional front, New Zealand emerges as a driving force behind the Caribbean's geothermal energy push. And over on the global stage, European stocks rise as US rate cut expectations strengthen. Stay tuned as we unpack these stories and more.
Wealth is not simply counted in dollars or cents, but in the time we spend with love, in love, giving love. Wealth is not simply a means to an end. It is the means to live out loud. Wealth is more than money. It's about family, the memories you create, the legacy you leave behind, and your ability to enjoy life in the moment. It's also about seeing the QMAX possibilities and seizing investment opportunities to achieve the future you want and deserve. Which is why QMAX Wealth will focus on your investments so you can experience more. Because true wealth is truly more. To start investing today, call 876-926-7767.
The local news is brought to you by Derriman Trading, better from the start. Development Bank of Jamaica, facilitating economic growth and development. Caribbean flavors and fragrances, tease the senses, and Pulse Investments.
Welcome back to CBX Business News. We begin with the Jamaican government's response to concerns over its newly announced JPS loan. The government is pushing back against criticism over its decision to loan US $150 million to the Jamaica Public Service Company, JPS. Energy Minister Darrell Vaz, speaking with unusual candor at today's post-hurricane press conference, argued that the move was the only credible way to fast-track the island's post-Melissa power restoration without compromising the country's long-term energy future. He revealed that JPS has essentially hit a financing wall, with lenders unwilling to commit funds to the company as they only have 2 years remaining on their electricity license.
Melissa posed a problem because with a license with 2 years to go, the JPS would not be able to find or raise the capital on the capital market. And first thing that they said was that they would need a 15-year extension of the current license in order to be able to raise capital. They met with the multilaterals, who were very, very anxious to help on an emergency basis, but they too said that they needed between 8 and 10 years extension in order to protect their loan.
Minister Vaz says that with the government holding firm on its decision not to renew JPS's license under its current terms, a different solution had to be found.
So the minister here and the government and the cabinet were in a pickle for two reasons. One, an extension on the existing license, despite the fact that we had Melissa, would be a breach of faith in relation to the commitments that were given. Secondly, we would not have time to negotiate any amendments, even on an interim basis, to speed up the restoration and be able to speed up the restoration at the same time. Huge problem, because the fact of the matter, as was said in Parliament by all my colleagues yesterday, the people want light.
He says following negotiations with key government and JPS partners, a loan agreement was reached to accelerate the electricity restoration across the island.
On Monday morning, after several different iterations and negotiations and proposals, we had a meeting with the Minister of Finance, the Financial Secretary, myself and the Permanent Secretary, President and CEO of JPS and the Chairman. And I made it clear on the outset that we are not discussing an extension and funding. We are separating both. That was agreed. We were able to come out of that meeting and go to Cabinet to get an approval to loan the JPS $150 million immediately, on the basis that that money would be used singularly for an advanced restoration, taking us from April or May next year to January to February 2026.
Meanwhile, the Jamaican government is moving to reassure the public that taxpayers will face no financial exposure from the US $150 million emergency loan extended to the Jamaica Public Service Company, JPS. Energy Minister Darrell Vaz says the loan was structured with 2 layers of protection to ensure the state is never left holding the bill.
That is what Cabinet approved, a 5-year loan, which means that they have the option to pay it off in 2 years, which is when their license expires. If they are successful in the negotiation on our terms, they'll be able to raise the capital immediately to pay the government back their money. If they are not, and there's a new player that is coming to the table, the contract and the conditions of the license requires that the government buys the assets of JPS, which means that our $150 million will be set off with whatever that valuation is. I want to make it very clear that the government has acted responsible and that the government and the taxpayers of Jamaica are secured. Worst case scenario is that we convert the $150 million into preferential shares in JPS if they are unable, for whatever reason, to repay.
That was Jamaica's Minister of Energy, Darrell Vaz. Jamaica's long-term recovery from Hurricane Melissa has taken a major step forward, with the Planning Institute of Jamaica, PIOJ, commissioning a comprehensive damage and loss assessment to measure the full economic impact of the storm. PIOJ Director General Dr. Wayne Henry says the assessment is being carried with direct technical support from several regional and international partners.
A damage and loss assessment report on the impact of the event, led by the PIOJ, with support from the United Nations Economic Commission for Latin America and the Caribbean, UNECLAC, and the Inter-American Development Bank, IDB, has commenced. It is anticipated that the assessment will be completed in late December. In the interim, through its global rapid post-disaster damage estimation grade assessment, the World Bank has estimated the preliminary cost of damage associated with Hurricane Melissa at US $8.8 billion. This translates to approximately 41% of 2024 GDP.
That was PIOJ Director General Dr. Wayne Henry. In other news, Fontana Limited is reporting significant operational strain across its western Jamaica branches following the devastation caused by Hurricane Melissa, with its Montego Bay branch suffering the heaviest blow. In an exclusive interview with CBX News, Fontana's CEO Ann Chang says the Montego Bay store sustained extensive roof damage and flooding, with Savannah Lamar affected to a lesser extent. She says widespread outages, power, water, and cell service have also crippled daily operations in the affected areas, forcing reduced opening hours and complicated staff commutes. Still, Fontana notes that foot traffic remains strong during the limited hours, largely because many surrounding businesses remain closed. Pharmacy services also continue uninterrupted, with the only constraint being the compressed operating window. She also noted that thanks to minimal damage at their Kingston and Montego Bay warehouses, Fontana was able to keep a steady flow of essential goods into the West. We move to the latest updates from the JSE Equities. In Wednesday's trading session, the JSE market activity resulted in the trading of 109 stocks, of which 49 advanced, 39 declined, and 21 traded firm. Leading the winners are Iron Rock Insurance Company, ISP Finance Services, Margaritaville Turks USD, and Productive Business Solution USD ordinary shares, while leading the losers are Key Insurance Company, Fontana Limited, Paramount Trading Jamaica, and Blue Power Group. The main index declined by 103.22 points, or 0.03%, to close at 314,791.40 points. The junior market index declined by 16.40 points, or 0.49%, to close at 3,323.03 points.
And it's time for Market Education Feature, brought to you by CARICRIS, Regional Ratings, Global Standard.
In today's Market Education Feature, we're looking at letters of credit. A letter of credit is a bank's guarantee that a buyer's payment to a seller will be made in full and on time. If the buyer can't pay, the bank covers the amount, helping the transaction proceed smoothly. Letters of credit are widely used in international trade to reduce risks tied to distance, different regulations, and potential non-payment. They also allow the issuing bank to pay the seller directly, and if the letter is transferable, the beneficiary can pass those payment rights to another party.
The Market Education Feature was brought to you by CARICRIS, Regional Ratings, Global Standards.
And that's it for the local news segment. Please stay with us. The regional news is coming up next.
The local news is brought to you by Diamond Trading, better from the start. Development Bank of Jamaica, facilitating economic growth and development. Caribbean flavors and fragrances, tease the senses. And Pulse Investments.
We're here to open a savings account for my son John. I really want him to start saving and managing his own money.
And I need for Save to visit my father in New York.
Okay, based on what you said and our risk assessment, he will qualify for simplified customer due diligence requirements. I'll need your ID, proof of income, TRN, and John's ID as well.
Okay, here you go.
Opening an account is easier than you think using simplified customer due diligence requirements, also called CDD.
We get it! We get the big contract! 50,000 units a month for 3 years! Great! We need help.
If you are a business owner that requires capital for the expansion of your business, talk to a registered broker today to find out more about listing your company on the Jamaica Stock Exchange, an efficient alternative to other financing options.
Thank God for the Jamaica Stock Exchange Junior Market.
The Jamaica Stock Exchange, providing a fair, efficient, and transparent stock market.
Welcome back. And now for the regional business news. A powerful transformation is unfolding deep beneath the Caribbean's volcanic belt, one that could rewrite the region's energy future. New Zealand, a global geothermal powerhouse, has become the driving force steering the Eastern Caribbean towards commercial-scale baseload geothermal power. In a high-impact CARICOM Energy Month webinar on Tuesday, Friends consultant and co-delivery manager Joseph Williams identified New Zealand as the principal enabler behind the Caribbean's most advanced geothermal projects through the Friends Caribbean Renewable Energy Program.
A steady, consistent, and patient expert assistance, knowledge transfer, general capacity strengthening, support provided by government in New Zealand since 2014 have been critical, I would say, for the countries of the Eastern Caribbean which are pursuing geothermal development. All the countries in CARICOM that are pursuing geothermal development have benefited from this much needed support from government in New Zealand funded technical assistance program over the years. And I think it's fair to say that the countries have welcomed this and I've been generally grateful for the long, consistent, and patient support. So I think there's no question about the support of the government of New Zealand in this regard, and it's welcome and appreciated.
That was Friends consultant and co-delivery manager Joseph Williams. St. Kitts and Nevis is accelerating its clean energy transition, with the government confirming two major advances in geothermal development and electric mobility. Speaking during a press conference on Tuesday, Prime Minister Dr. Terence Drew announced that an Icelandic drilling company has been selected to begin drilling operations for the long-awaited geothermal project in Nevis.
I can say today that we had an assessment done for our energy sector, renewable energy, by a company called Castalia. And so we will be embarking on renewable energy infrastructure next year, because we now have a full professional assessment by a reputable international company. And also to be open and transparent that geothermal is very advanced. That will be discussed in depth as well with our people. We are very advanced. We have already actually procured a company. The company is already chosen. It's a company from Iceland. Iceland, we know, is one of the most advanced places on earth for geothermal. So it had gone through all of the bidding process. That was, of course, part of that was the CDB, who is a fundamental part of that. And the company to do the drilling for geothermal on Nevis is an Icelandic company that is already selected.
That was Prime Minister of St. Kitts and Nevis, Dr. Terence Drew. In other news, Prime Minister and leader of the Unity Labour Party, Dr. Ralph Gonsalves, has anchored his re-election pitch on a bold economic promise to develop St. Vincent and the Grenadines into a first world nation within 15 years. Speaking at a Unity Labour Party rally, Gonsalves said the country is already climbing the development ladder and argued that his administration's policies have moved SVG from a poor economy into the top tier of high human development. General elections in St. Vincent and the Grenadines are scheduled for Thursday, November 27, 2025.
The second document, which is also online, you can go on Amazon, and thousands of this have been circulated, called Developing SVG as a First World Nation. All the policies and programs and timelines for us to become a first world nation. That within 15 years, what you have in London, Paris, New York, and Toronto, you will have in St. Vincent and the Grenadines. And in many cases, even better, because our climate is better than theirs.
That was Prime Minister and leader of the Unity Labour Party, Dr. Ralph Gonsalves. It's now time for news from the Trinidad and Tobago Stock Exchange. Overall market activity resulted from trading in 17 securities, of which 5 advanced, 8 declined, and 4 traded firm. Today's winners are Ansa McCall, Prestige Holdings, JMMB Group, and Republic Financial Holdings, while leading the losers are A.S. Bryden & Sons Holdings, the West Indian Tobacco Company, Scotiabank Trinidad and Tobago, and National Flour Mills. Trading activity resulted in the following movements. The All-TNT Index declined by 5.43 points to close at 1,369.80. The Composite Index declined by 2.62 points to close at 947.64. The Cross-Listed Index advanced by 0.06 points to close at 69.38. The SME Index remained at 96.18. And we take a short break, but please do stay with us. The international news segment is up.
Caribbean Flavors and Fragrances Limited has been a part of Jamaica's manufacturing landscape for over 20 years. By crafting unique flavors and fragrances, we have become a part of your favorite household and food items such as beverages, ice cream, household cleaners, and much more. Known throughout the Caribbean for the highest quality, we continue to innovate with strong leadership, a dedicated team with integrity. We go the extra mile for our customers. Create the next taste sensation. Contact us at 876-9235-111 or visit our website, Facebook, Instagram, or LinkedIn pages.
In international news, European markets charged higher on Wednesday as investors doubled down on expectations of a U.S. rate cut in December, fueling a broad rally across the continent. The Pan-European Stoxx 600 climbed 1.06%, extending its winning streak to a third straight session and reversing last week's volatility. Tech stocks led the surge, rising 2.1%, with semiconductor giants ASML, Bessie, and Infineon all posting strong gains as traders priced in lower borrowing costs. Germany's DAX rose about 1%, while France's CAC 40 added 0.9%, supported by a wider rebound in industrials, consumer stocks, and financials. In London, UK banks strengthened after Chancellor Rachel Reeves unveiled her tax-raising budget, but avoided imposing new levies on the financial sector. Lloyds, NatWest, and HSBC all finished sharply higher. From Europe's market rally, we turn to Brazil, where its state oil giant is adjusting course in response to weaker crude prices. Brazil's Petrobras is preparing to cut its 5-year investment plan for the first time under President Luiz Inácio Lula da Silva, responding to a downturn in global oil prices. The upcoming 2025 to 2029 strategy, to be released Thursday, is expected to total about $109 billion, roughly 2% below its previous $111 billion capex plan. The company has been contending with falling crude prices, with Brent now trading near $62 a barrel, well below this year's average. Executives say Petrobras must prioritize efficiency, avoid raising debt, and keep its dividend policy intact. Despite the reduced outlay, Petrobras will continue focusing on boosting production and improving refinery performance. Back in the United States, a major media takeover battle is heating up, and one broadcaster is taking defensive action. EW Scripps has adopted a shareholder rights plan to give its board time to fully assess a US $538 million takeover proposal from rival broadcaster Sinclair. The so-called poison pill would activate if any investor crosses a 10% ownership threshold, allowing existing shareholders to buy discounted stock and dilute any hostile acquirer. Sinclair recently revealed an 8.2% stake in Scripps after months of private negotiations, then formalized its offer earlier this week. A merger would create a local media powerhouse with more than 240 stations, though it would likely face regulatory challenges under the Federal Communications Commission's 39% ownership cap. Scripps shares have surged more than 40% since Sinclair began building its position. But with the Scripps family controlling 93% of voting shares, the path to any deal remains highly complex. And finally this evening, a major fuel supplier to the American Midwest is back online after weeks of disruptions. BP's 440,000 barrel per day Whiting refinery, the largest in the U.S. Midwest, has fully returned to normal operations following months of planned maintenance and unexpected shutdowns. The facility had taken multiple units offline for a turnaround in September before an October fire forced additional closures. A week later, an external electrical failure triggered another outage and a temporary evacuation. Power was eventually restored, allowing crews to complete a staged restart. Sources say the refinery is now running at full capacity again, providing stability ahead of winter fuel demand. The Whiting complex is a key supplier of gasoline, diesel, and jet fuel across the region, and its return to service is expected to ease pressure on wholesale prices and strengthen refinery margins heading into year-end. And that's it for the international segment of the newscast. The news recap is coming up on the other side of the break.
Been coming along well.
Thanks, man. You know, it's a long time I've been working at it.
I can see that. I saw your mail by the gate, so I'll pick it up for you. But tell me something. Why are you still receiving dividend checks by mail?
What do you mean about that?
You need to give JCSD a mandate.
You know, me hear about the mandate then. I'm going over there right now.
A mandate means giving instructions to the Jamaica Central Securities Depository Limited, JCSD, relating to the handling of your dividend or interest payment. There are 3 types of mandates. The first is a bank mandate. The second is a hold mandate. Lastly, we have what we call a third-party mandate, with which the investor may wish to send their dividend or interest to someone other than the parties on their account or institution of their choice.
In the local news, Jamaica's government defends the decision to loan JPS US $150 million to accelerate Melissa restoration. Regionally, New Zealand emerges as a driving force behind the Caribbean's geothermal energy push. And internationally, European stocks rise as US rate cut expectations strengthen. Those were the stories making today's CBX Evening News. On behalf of the entire production team, I am Rochelle Moncrief. Thanks for watching CBX, your region, your business, your source.